Yo, what's going on, guys? In this part of the section, we're going to be going over trading plan and risk management. So get right into it. Number one, make your own rules for entry criteria. Yo, what's going on, guys? In this part of the section, we're going to be going over trading plan, risk management. In this part of the group, in this section of the course, we're going to be going over trading plan, risk management. Number one, make your own rules for entry criteria. Rule number one, make your own rules for entry criteria. So basically confluences, whether if it's fibs, imbalances, liquidity, price action, change character, whatever you take into your own strategy, use that with your confluences. Make sure it all lines up with your setup to make the entry more probable. Rule number two, know how much you're willing to risk before executing the trade. So basically, that means if you have a $100,000 funded, what I would do is risk 0.5%. We can risk 1% per trade. So what that means is per trade, willing to risk $500 to $1,000, right? So if you have a minimum of 5R, which that's how I trade, you're looking at a $2,500 to $5,000 gain. So basically, two of these trades, risking 1%, you complete your first phase of any funded pretty much. And then if you take 1 to 2 setups with just risking 0.5%, you're passing your second phase. So simple as that. Especially with funded accounts, you can really risk a little tiny percent for big gains. That's why I really do preach funded accounts. If you do have a little account, small account, it's gonna suck, but you really have to build up your not only your confidence, but also your consistency. So if you're not consistent, then why would you want to risk 10% on a single trade when it's your own money? I don't think anyone wants to do that. So even if you have a personal account, risk 1% per trade, 2%. Even if you got a $100 account, $200 account, once you compound that, once you gain the consistency, then you can up your lots and start making more profit. But yeah, so that's pretty much just what it is. Know how much you're willing to risk for executing the trade. If you don't, if you go into a trade blindly, not knowing how much you're risking, you could be very upset once you get stopped out of that trade. If it hits your TP, there you go. But if you pop a big lot and you don't realize that you're over leveraging, you're screwed. Your whole day is gonna be ruined. You're gonna be like, oh, why'd I do that? You're gonna regret it. Go into the trade knowing how much you're willing to risk and how much you're gonna make as well. So third off, how many trades per day will you allow yourself to take? Me personally, if I have one loss, I'll take one more trade. So if I take 2 losses, I'm done for the day. If I take a win, I am done for the day. I'm not taking another trade. So the most I usually will take is 2, and I really don't take anything more than that. If you do, I honestly think that you're over trading. I've done it in the past. Don't overtrade, don't over leverage. That's the main thing with trading plan and risk management. Please don't do that. Stick to your rules. Don't go against them, because once you go against them, you're just going to screw your own self. Trading, it's not how the market runs, it's how your mind runs. So yeah, the market is a game of probabilities, but you need to train your mind to know what setup is more probable and what setup might just get run through. So how many trades per day will you take? I take 1 to 2 per day. That's it. Number 4, what is the minimum RR you're willing to take? Me personally, the minimum RR I take is 5. Why? Because if I have a $100,000 account, if I'm risking 1 RR to make 5, once again, I'll be risking 500 to make 2,500. If I'm risking 1,000, I'll make 5,000 or even more. That's just the minimum. So with this strategy, with the way I trade, the RR is kind of a little bit bigger. Yeah, you might get stopped out a little bit more, but overall, you're still going to be in profit. because the risk to reward with this strategy, the way that I do trade, is pretty good. I'm not gonna lie. So just figure out how much you want to risk per day, and then decide how much you're willing to profit. So I mean, say like today here was a setup on the 15-minute. We refined it all the way down to the 1 minute. If you're taking this setup and riding it to this liquidity right here, you're having a pretty good day. You're taking a 32 RR gain. You're risking 4 pips to make 134. So once again, if you're on $100,000 account, if you want to risk just, you know, 100 lot, $100 per pip, that's $416 you're risking to make $13,400. So I mean, it's really good. You just need to figure out, you know, where you want your take profit. If you want to take it here, then it's going to be lower, obviously. If you want to take the whole move, you got to figure out where you're going to get in, where you're going to get out, how much you're going to risk, and how much you're going to make. Simple as that. Also, are you going to trade every day? You have to back test this. You have to back test every day of the week, okay? Make sure you back test and figure out what days don't work well with you. If there's a certain day where you lose mostly, don't trade that day. Simple as that. If there's a day you do really good on, you know, up the lots a little bit that day. Or take another trade. It's up to you. You have to figure out your own plan and you have to stick to it. I can't, you know, hammer that down enough in your minds. Make your own trading plan and stick to it. Use the correct risk management. Don't over leverage. Don't over trade. Don't have any FOMO. Don't fear losing money because you're going to make it back. If you lose 1R, the next trade you have an 8R gain. There you go. You just made 7R within 2 trades. You know, it kind of evens out. So me, personally, I tend to trade every day, but I realize Wednesday, not good for NASDAQ. Most of the days. I mean, most of the weeks. So, like, we'll go to yesterday. I think yesterday was actually decent. Yeah, we had a decent day yesterday. Had this sell right here. Missed this one. But I was back testing last night. That's why I have all this marked. But if we go to last week. So last week was the 10th. This was the New York Stock Exchange open around here. There's nothing, you know. It's horrible. Sorry about my dogs barking in the back. So Wednesday, not good for NASDAQ. You know, I might trade this day, I might not. Sorry about that. Alright, next, what session will you trade? So if you're trading, say NASDAQ, you're going to want to trade New York Stock Exchange. Now if you're trading, let's say GBP, JPY, being that they're in a different country, you're going to want to trade a different session. Yeah, does it move during New York Stock Exchange? Yes, it does, but this moves during London mainly. You know, 3 o'clock, all right here is big ass moves, you know. You might have some during New York Stock Exchange, but look, London session, big ass move. Right here, NASDAQ, go to here. New York Stock Exchange, big move. New York Stock Exchange, big move. New York Stock Exchange, big move. You know, it's every day, the same thing, over and over. It really doesn't move during Asia or London. It mainly only moves during New York Stock Exchange. So if you're trading NASDAQ, if you're trading indices, US 30, NASDAQ, German 30, SPX, those are mainly New York Stock Exchange. So if you're trading those, stick to 9:30 or whatever time it is for you when it opens. If you're trading other pairs, you know, different countries, GBP, JPY, Euro, trade it during London. Simple as that. Oh, my gold's there. So I trade New York Stock Exchange. I don't know what is going me today, but yeah, I only trade New York. I don't trade London. I don't trade Asia. And lastly, what is your monthly profit target going to be? Because weekly you could have a bad week, and then you could have a really good week after that. So if you have a bad day, bad week, don't get down on yourself. It all comes down to how much you're making at the end of the month. If you're not profitable at the end of the month, you've got to reevaluate. Usually it's not the strategy, it's usually your mental. So work on your psychology, work on your trading plan, work on your risk management. That's all I really have to say. But me personally, I like 5 to 10% per month. So, yet again, I'm making this an example. $100,000 account, funded, that's $5,000 to $10,000 a month. You have a $200,000 funded, that is $10,000 to $20,000. I don't know why I can't type right now or even talk. $400,000 account, that is $20,000 to $40,000. And it goes on. But this is what you have to take into consideration. Do you want to go funded? Do you want to trade a personal account? Personally, if you don't have enough funds to trade even $1,000, I would do funded. Just because if you make 5-10% a month, you're clearing these type of numbers. Even 50K, if you have $50,000 account, if you do 5%, you're making $2,500. And if you're clearing 10% a month, you're making $5,000, even on a $50,000 account. So it's not bad. Really take into consideration whether you want to go funded, pass the challenge. My group chat, I'm going to have trade analysis. I'm going to have webinars weekly, homework, a lot of stuff. So if you are looking to get funded and you really don't have the psychology, you don't have the idea of the trade setups that I take and how I take them completely in your head, you might want to go check that out. If not, if you're already profitable, if you just want to get this course to kind of understand psychology and or the way that I trade, it's on you. But personally, I'm funded. I like fundeds. I've got multiple payouts. I'm about to get another account probably in the next week or two. Probably another 50K or 100K. But yeah, that's basically it. This is everything for trading plan and risk management. So one more time, risk 0.5% to 1% per trade. That's it. Now, if you want, you could even risk 0.25%. Sometimes I do risk 0.25% if I'm not 100% sure about the setup. So you could do 0.25%, but if you're on a $50,000 account, it's not really much. If you're on a $100,000 account, you're risking like $250. So it depends how you trade. Depends how much you want to risk. It's on you. Risk more, you make more. You risk less, you make less. But probabilities are way different. You could lose more or you could lose less. It's on you. So that's basically it. I'll see you guys in the next one. I think I'm going to be covering, I don't even know, but I'll see you guys in the next session. Peace.